The Latin American financial sector stands at a turning point, facing unprecedented challenges that could completely reshape the banking landscape in the next decade. According to the latest Moody's ratings report, Latin American banks, which have historically enjoyed enviable profitability, now face an uncertain future. Let's analyze this situation more closely. Let's begin. For years, these financial institutions have consistently outperformed their counterparts in developed markets, benefiting from significantly higher net interest margins. But what's behind these impressive numbers? The answer lies in the very nature of Latin American markets. High credit risks, a history of economic volatility, and a maze of legal obstacles have created a unique environment where banks have been able to thrive, despite, or perhaps because of, these challenges. After all, high interest rates and aggressive collection methods throughout Latin America have become something of a meme. However, the winds are changing. A period of slow and prolonged economic growth is approaching, forcing banks to rethink their strategies. Following past formulas will no longer suffice. Adaptability will become the keyword for survival and success. But slow economic growth is just the tip of the iceberg. Banks face the need to make massive investments in technology, a race against time to avoid falling behind in the digital era. And as if this weren't enough, they must do so while fighting against a new wave of competitors, digital banks and fintech companies, which are redefining the rules of the game with their efficiency and agility. Fintech companies are rapidly gaining ground against traditional banking. This transformation isn't just due to technological innovation, but also to a fundamental change in customer expectations. According to recent studies, most consumers are attracted to the agile and cost-effective services offered by fintech companies, strongly contrasting with the classical slowness in procedures and consistently unpleasant bank user interaction, with 75% of customers showing preference for these new financial options. Funding costs represent another monumental challenge. Some banking systems will be forced to deal with high costs, testing the very foundations of their business model. Traditional low-cost deposit bases, which for years have been the pillar of high margins, could begin to wobble. Credit portfolio quality will be a constant point of tension. In a weak and uncertain economic environment, banks will need to walk a tightrope. On one side, the need to expand their business, on the other, the obligation to keep credit risk under control. Each loan granted will be a crucial decision, a delicate balance between growth and prudence. Competition in credit markets will reach unprecedented levels. Banks will be forced to innovate, improve their productivity, and diversify their product offerings like never before. This intensification of competition will exert constant pressure on credit spreads, challenging banks' ability to maintain their margins. Regarding the funding landscape, a long-term transition toward higher costs is approaching. This will gradually erode current margins, forcing banks to seek new sources of income and operational efficiencies. The arrival of fintech companies and neobanks will add another layer of complexity to this scenario, intensifying the fight for customers and resources. Technology is emerging as the decisive battlefield. Latin American banks are betting heavily, doubling down on their investments in cutting-edge technological tools. The objective is clear: improve efficiency, strengthen operational security, and revolutionize credit risk assessment. These investments represent a significant short-term cost but are the cornerstone for ensuring competitiveness and future income generation. In this new landscape, banks are using advanced analytics technologies to study in depth their customers' spending habits, financial history, and credit position. This information is pure gold in the digital era, allowing banks to design personalized offers and explore new services beyond traditional banking. The banking sector in Latin America is on the brink of a radical transformation. The coming years will be a period of intense adaptation, where innovation and flexibility will mark the difference between success and failure. In this increasingly challenging and competitive environment, only those banks that manage to reinvent themselves and adapt to new realities will be able to maintain their leadership position. What do you think? Will traditional banking's efforts be enough, or will new digital competition manage to challenge them and steal the majority of the Latin American market? If you liked or found this video helpful, give it a like, or if you prefer, subscribe. We upload videos weekly. See you next time.